Hey everyone, Andy here from Luminary Wealth. So, over the past couple of months, I've noticed that a lot of people have started to dabble in day trading. And since the markets have gone up substantially since March, a lot of people are starting to get the sense that they're good at it. We've seen popular stocks like American Airlines or Royal Caribbean go up as much as 20, 30, 40% in a single day. And so you can see how day trading could be tempting. But I think this is giving people what I fear to be a false sense of confidence in their investing acumen, which could end poorly for a lot of people. So I just wanted to offer a little bit of caution before you jump into the world of day trading. Let me start by saying that as a firm, we don't do any day trading or even buying and selling individual stocks unless specifically requested or under unique circumstances. And the reason for that leads me to my first point, which is the risk of trading individual stocks. When you put your money in a single stock or even a handful of stocks, you're exposing yourself up to a significant amount of unnecessary risk. Your financial success depends on the success of a single company or a handful of companies. We've seen popular companies like Blockbuster, Kodak, Pan Am, companies that were seen as very successful and a attractive investment opportunity go bankrupt. And these kind of things happen all the time. The world changes, events happen that companies aren't able to adapt to, and then the investors lose. So when you put all your eggs in one basket or even a few baskets, the consequences can be significant. And this is especially true in times of market volatility like we're seeing today. At the end of March, American Airlines had a week where they were up 35%, but then the following week they were down 33%. And this has happened on a day to day basis as well. And unless you can time when to get in and when to get out consistently and correctly, then you're going to lose. And the only way to be able to time that consistently and correctly is if you know the future or if you know a piece of information that nobody else does. And that's referred to as insider trading, which is frowned upon. In fact, most mutual funds fail at consistently picking winning stocks. Of the roughly 3,000 mutual funds that were around 15 years ago, only 52% of them are still in existence today, and only 20% of them actually beat their benchmark. That means 80% of them lost. And these are smart people with access to the best tools and resources out there. So the idea that an individual investor can consistently pick winning stocks at the right time is extremely unlikely. And while it can definitely be fun on the upswing, it can be devastating on the down. Another factor that I think is often missed when it comes to day trading is the tax consequences. So, in general, you have to pay taxes on your investment gains. Now, if you sell a stock that you've held for longer than 12 months, you pay long term capital gains, which is a reduced tax rate, could be as low as 15 or even 0%. But if you sell a stock that you've held for less than 12 months, you have to pay your ordinary income tax rate on that. So that could be 20, 30%. It's much higher than the long term capital gains rate. So when you're looking at your Robinhood account and you see these big gains, keep in mind that if you sell those in less than 12 months, a big chunk of that is going to get paid out in taxes. So you may not be making as much as you think. Another thing to consider is trading fees. And these are less common now with apps like Robinhood, which I actually think incentivizes people to trade frequently. But if you are on a platform that charges trading fees, you need to factor that into your return because those could be eating away at your gains if you're trading often. Aside from the potential financial turmoil, another risk of day trading is emotional turmoil. Your investment portfolio should reduce your stress, not add to it. I just read this story on MarketWatch the other day of this 20-year-old who was trading options on margin, which is a whole other layer of risk. And he somehow ended up $700,000 in debt. Shortly after discovering this news, he ended up taking his own life. And I've seen stories like this, sad stories where people get addicted to day trading. They don't really know what they're doing. They take more risk than they should, and they end up in financial ruin. So don't let that be you. If you are going to play around with individual stocks, just make sure that it's not in any kind of significant amount. If you want to have some fun, just make sure it's not in an amount that is meaningful to you, that it's not going to jeopardize your retirement or your livelihood or your savings. It's fun to watch guys like Dave Portnoy at DDTG. That's entertaining, but that guy's very wealthy. He can quite frankly afford to lose the money that he's playing around with, but not everybody's in that situation. So don't sacrifice your long-term goals for the small potential of short-term gains. Invest your money, time, and resources wisely, and have a great week.